The usual advice is have some of your portfolio, typically 5%, possibly 10% of your portfolio in gold, either physical gold or gold equities, because it does provide robustness to that portfolio.
And that argument remains then, right?
It's always remained that we don't know when inflation is going to take off. At the moment, governments, central banks are more concerned with deflation.
Right.
But as we move away from deflation, and if the oil rally remains where it is, then that's going to feed through. The Fed's looking at wage increases in the US.
But you don't see 1,800 an ounce, up 600 from where we are anytime soon.
I have to say I would be extremely surprised. It's not our base case. We see gold falling because of tightening US monetary policy.
So you see it fall, you see it down. You're actually a bear on gold, right?
We are a bear on gold. We have been for some time as a house. Because gold is a monetary asset and it will be very much driven by Fed tightening cycle.
But if they do tighten, it's going to be really small and gentle, though. We know that. We know they're not going to go 25, hundreds of basis points. It's going to take years to get back to where they were, if they ever get there again.
That's the default view. But what happens if inflation all of a sudden does start to creep higher? We think the Fed could be more aggressive. So yes, I would say the first rate increase small, but what about the eventual path of rates afterwards?
When I look at the, I get a daily quick at-a-glance update on a year-to-date performance, and it changes every day, obviously. I noticed that there was some action in silver. At one point, silver was up by a couple digits, 15% or so, then came back down to be a subpar and back up a little again. Why the volatility in silver? Is somebody trying to corner the market?
Silver's notorious because it's a much smaller market. Funnily enough, for many years, US citizens were banned from trading gold, so they traded silver. So you get a lot of, I would say, individuals, retail investors in the silver market compared to gold. And there's a market saying that if you have a view on gold, either bullish or bearish, well, don't trade gold, trade silver instead. So it's a proxy, if you know. It's a cheap option, I suspect.
Okay. Among the four, the most talked about, normal, yellow and white metal, precious, in the precious segment, you're the most optimistic on palladium in the neutral call there. Why is that? That's got to be catalytic conversion, right?
It is, and it has a lower correlation to gold and platinum. Platinum, we think, will follow, if our view is correct, will follow gold lower. Palladium, we think, can decouple because it's got better demand leverage because of the growing US-China car market. Also, supply probably more constrained because it's largely dependent on Russia and Russia liquidating its stockpiles, which we think probably have now fallen to multi-year lows.
Yeah, well, I was kind of disappointed that the jewelry contingent didn't do more with it. I mean, platinum is a very standard, of course, metal to work with, but the Chinese were working with palladium. There. I mean, is the jewelry, is the wearable component, is that rising? Is it significant, or is it still just very niche?
It's niche. I have to say, for jewelry, platinum probably wins out over palladium because it's, more closely in price to gold, whereas palladium's often seen as a bit too cheap, if you